Welcome everyone to another episode of Blockchain Banter Trading Crypto. Today is a kind of a special US election episode here titled Ballots and Bitcoin. I really wanted to kind of look at just a few different factors, obviously US elections being one of them. Here with me, I have Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys for joining me. As always, I absolutely love our Tuesday calls, and I feel like today is going to be a little bit extra, like I said, special, just because of the US elections. I saw an interesting tweet today. I don't know if there's something specific you guys wanted to get into, or if maybe one of you might pull up your Bitcoin chart and we can kind of pick at what this tweet said and maybe start there and then kind of look at the order book, look at the liquidity and see what you guys are seeing. What this tweet said was that historically, every US election has caused Bitcoin to rise above its previous all-time high and not retrace to where it was prior to the election. So I thought maybe we could pull up the chart, verify that. See
what's the source of that tweet?
Let's see. I can share it here.
And did they post a chart or anything to go along with that?
They did, and I wanted to see.
Share it.
You know what I'm going to do? I'm going to share it here in the comments, so everybody here, if you're following along, you can look at it also. BTC Archive is the account that I saw it on. And maybe I was rephrasing. Let's see. Bitcoin has always gone parabolic after a US election. Bitcoin has never dipped back lower than the price on election day. So I'm curious to not only see that for ourselves, but to see what their definition of parabolic is in terms of percentages, what we might be able to expect if history, repeats itself. And this is in fact a trend that we would like to maybe, quite literally put our money on, right? And obviously, if it hasn't gone back down to where it was prior to election day, it retraces to a certain extent, I would think, right? So maybe we can see if we can identify any sort of a trend there.
Okay. Well, yeah, I guess
not to put you guys on the spot or anything.
No, I mean we can go look at the chart and scroll through a bunch of November, first Tuesday in November's, I guess, right? That's what election day is. It's always on a Tuesday.
Yes, sir.
Okay.
Let's. You gonna pull yours up? Do you mind?
Sure. Happy to oblige. Anything for the Queen.
Oh, well, thank you. Okay, bringing you up. Let's see what we got.
Okay, so last election was 2020.
Mm-hmm.
And we had November 2020, November 3rd, 2020. Up. That's interesting. I'm going to throw an arrow or something there. Give me a...
And also for any of the viewers too, if there are different trends and things that you're noticing or something specific that you want us to look at, especially right now while we have the charts pulled up, please comment, and we'll take a look at that and see if we can get our eyes on what you're seeing.
Okay, that's an ugly arrow, but you get the point.
But it's an arrow nonetheless.
Yes, it's an arrow. So then we go back 4 more years.
Mm-hmm.
2016. Mm-hmm. Right. Bitcoin's not that old, so we're not going to have to do this very long.
Right.
October, November. Like, this is some interesting data.
Right.
Was it November 1st?
We've spoken about the elections and things.
What was election day? Was it indeed November 1st?
Let's see if we can.
Look up, right, so I don't have to leave my screen. Just look up what was election day 2016.
Election day 2016. Let's see. November 8th.
Okay. All right. So here's November 8th.
Mm-hmm.
Price closed at what? November 8th, 2016. Price closed at $709. Oh my God. Wow. Actually, you know what? Let me throw up one of these and we could see what the drawdown was. November 8th. Second, like I'm just daydreaming now on $700 Bitcoin. Jesus. Right. And how fast things can actually change.
Mm-hmm.
Because my first Bitcoin trade was, where was it? October of actually 2017. Okay, so I was a year later. But
oh wow.
But that was $6,000.
Mm-hmm. 6,000? Really?
Yeah, it's like $100. Okay, it was my very first foray into crypto was $100 on Bitcoin at $6,001. That was me buying the breakout, by the way.
Okay, so that's a year after the election. So let's see.
Yeah, but
Right?
but the
That
point
was you buying the
point
breakout,
of
of
the
course.
point of this exercise
Mm-hmm.
is that, okay, there was only 3% drawdown from that a couple days later, right? And then it was off to the races, right? And I could draw this as high as we wanted, but just in the short term, it was a 62% move just until January. Okay. So Q4 from election day to New Year's was a 62% move.
Wow.
Right.
So they
Now
have
we don't see
2012
we
also.
don't
Did we go
see
back that
moves.
far?
I don't think we see moves that big anymore, right? Out of Bitcoin. Um, just as a
Not in that sort of time frame. What did you say? Through the first of the year?
yeah. So now we got to go back 4 more years. It was 2012.
2012. And they're showing it was $11.20.
All right, I just threw up in my mouth a little. $11 Bitcoin. Can you imagine?
No.
That was November 12th, you said?
I don't know if it was November 12th. I know it was November
Okay, what was
2012.
election day in
Let's
2012?
see. It was. Why isn't this? Hold on. It's bringing up videos. November 6th.
Oh, that's not what I wanted to draw. November 6th.
I think you're in 2011.
Oh, that would explain it. This is what happens. I'm on my first cup of coffee. First sip.
Keep going. Keep going a little bit more to the right.
I'm not moving it. I'm not moving at full speed this morning. November 6th.
Yeah.
Okay, and that one was up. That one was freaking
wow.
Yeah. Don't think that this is indicative of what's going to happen in terms of percentages. If we indeed get a big, just a continuation from here, don't think we're going to go up that large. There was no drawdown on this one, but the screen it's so compressed that I can't even
Right.
There was nothing in terms of drawdown, really.
And when it did, it was what? How many months later?
No, I mean the drawdown we had. This was okay.
$11
Here,
more
I
or
mean,
less.
well, It went down to $10 from $11. Was the wick, right? Was the wick
Mm-hmm.
below? So this is, you know, I don't know if 3 times in history is enough to say that like, you know, Mark, you're a scientist. Um, would you say that's enough data to say, oh yeah, that's a pattern that we can bank on, or do you go, well, that's interesting, and this could happen. Absolutely, it could happen, but
You want your confidence is commensurate with the number of data points you've collected.
okay,
3 data points is nothing, barely a trend makes.
right.
But
So
it's interesting to point out though, and this is like, coming back to the election day, um, debates that I'm seeing, that this is, if we do accept this trend, it's bipartisan.
right, right,
You know,
and
like I see a lot of people on both sides of the carpet saying that if Trump wins, that's going to be bullish for the market, and if Kamala wins, that's going to be bearish for the market, and then the exact opposite on the blue side.
well, and
So then,
I
does
would
it
say
actually matter?
I would say back
No,
like
it's
going back to
it
2012, Mark, were there really
yeah.
enough people trading Bitcoin? Uh,
I mean, you tell me. I've got no idea. I
right.
imagine it was a relatively small group
So
of
let's
people.
look at 2020. Let's look at 2020 and see what it did, because I mean, that was DeFi summer. It had grown quite a bit since 2012. What is that showing
Okay,
us?
so let me make sure I got the right election day for 2020. Tell me what was election day
Okay,
on
let
2020.
me look this up. Tuesday, November 3rd.
November 3rd. We were
Correct.
at 14,000. And it looks like not much, if any, drawdown here either. Yeah, no drawdown. So that was a straight that was impressive. Um, yeah, that was the move to all-time high. So, historically and so let's do this. Just for the sake of the exercise and
Hmm.
maybe um adding or reducing validity on this being around the election. Maybe it's just around fourth quarter. So what if we go look at November's, right?
Let's do it.
So, gosh, this would have been great. Like if this would have been great to I could have, we could have prepared this. But so for anybody watching, I'm
This
sorry
is
for the
totally spur of the
painstaking
moment.
way. I'm sorry for the painstakingly slow way that I'm navigating the chart with 2 sips of coffee in me. But so
Two
let's do that.
sips. I have to give you credit. I need at least 2 cups.
Let's. I switched to decaf. It's only just a psychological mind fuck for me now at this point. I just
Oh,
It's
that's the problem. It's not the 2 sips, it's the decaf.
one of the. I mean, it's also worth pointing out that these aren't just any Q4s. These are Q4s during a Bitcoin halving year.
right. So let's add my halvings back into the chart that I have down here someplace. Boom, 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 boom. Okay. So that's a great point, Mark. So we're just going to move forward from here. 2013. Huge, right? Q4 is where it's at. We'll just ballpark them anywhere.
Hmm.
That looks red, so it looks bad.
You know, there is a difference. Well, I mean, I guess you're looking at what, a year and a half later. Like if I see where it, like the drawdown, right, where it retraced, there is a difference between the first, where you had marked the election to
Right.
where it had retraced back to,
Right.
versus this November that we're looking at now.
Right. That doesn't mean there's no dips after the fact, but
Of
it
course.
it left that range, and we can see there was a big move
Mm-hmm.
to the top of that market, right? Without drawdown. So that's notable, and we know
Mark,
we
go
know
ahead,
that
Keith.
I was just going to say that we know that Bitcoin has historically performed well in Q4,
Mm-hmm.
right? That's normally been our time to shine, at least in the in the time that I've been in. So that was 20. What did we just do?
13.
That was 2013. Now we went to 2014. Okay, so this could be different here in 2014 because we're in a bear market, right? June, July, August, September, October. And look what happened in November. Right now, this gets interesting because you can see there was a crash that followed, but there
Mm-hmm.
was initially, anyways, a nice move. October, November, call it right here.
And I think this is one of those differences, Keith, that like caught my attention, because in that tweet, it wasn't just saying that it went parabolic in November or during, right after the US election. It was saying that it never dipped back lower than the price on election day. So even if Novembers are known to go parabolic every year, how
We've
often
seen
are they
though
actually
these,
retracing to where they were?
Right, but look
yeah,
at November of 2014, right?
Mm-hmm.
We had a nice 42% move to the upside,
Right?
and then we retraced. Then
Mm-hmm.
there was 52% of drawdown
Right.
shortly after. So that's not the up only narrative.
No, well, the up
And you
only
guys know what a
narrative
big
is
fan
for
I am of that.
election year, is what they're saying, right? So now we're kind of looking at the rest of the Novembers to see if
Right. And I think
this.
that Mark's post halving point is very valid here, right? So we just looked at January, we just looked at November of 2014 into 15. And now let's look at November in 2015. Also looks pretty good. August, September, October, November. Now there was some drawdown on this. Initially, right?
Mm-hmm.
So went up, came back down, fully retraced, and then moved up. But it retraced to where it started. So it wasn't drawdown per se. I don't know why this thing goes so freaking deep on me like this. Like annoying.
Don't curse us like that, please. Although I think some would be in their glory. You were drooling earlier over, what was it, $100 or $11 or something like that. 700.
All right. So now we're going to what? 2017.
Mm-hmm.
Okay. Here's one that had some drawdown.
So again, not an election year, right?
Correct.
Or a halving.
And the drawdowns were not, well, the other one was 53%, 52%, something like that. This is
Right.
down 10%, up 60%. I'll take that risk. We won't actually make that up
Wow.
to 20K. Yeah, this
Significant.
this is where I started. Where was 60?
Okay, that's still not a terrible time to start, Keith.
Oh, it was a fantastic time to start. But the problem, the problem is a new trader, and this is where maybe we can deliver something of more value to to the audience is, especially the newer traders, is when you come into the market for the first time, we all start as noobs. We all make mistakes. I know I got my teeth kicked in like a lot. I'm not a smart man. I learned the hard way, and sometimes I've learned the hard way multiple times just to remind myself. And those are painful reminders, and they're costly reminders. But I chalk that I chalk those experiences and those losses up to the cost of my education as a trader.
Yeah.
And so from what I've spent right now, I should probably have my PhD from, like Yale. But the point is, anybody that's come into the market in the past year or so has been on a hell of a ride, right? I mean, we've had it's been a fantastic year plus. And really since the FTX crash, anybody that came in since FTX, I can't think of anything that's been really, really bad. We had
Definitely not in comparison.
we were having some bank run issues around that event. Okay. And that was all related to that event, right? But after that, can you guys think of anything that was really like black swanish?
No.
We had COVID.
Not
We
off the
had
top of my
FTX
head,
crash, some bank runs. I can't think of anything. There's probably something out there, but the Ponzi's that have happened since then have not been to the level
no.
of
Have not affected the entire market the way that FTX did.
So and that gets us to like people who bet the poly market trade, right? Or I should say, who traded the poly market narrative. I don't know about you, but I didn't realize initially. I was seeing these polling numbers, and I was like, "What is this? It doesn't make any sense. It does not match what we're seeing in this data from Polymarket. Does not match what we're seeing on the ground, right?" And I'm not trying to turn this into a political debate. I don't want to go there. But some of the actions of what we were seeing and words we were hearing did not match the extreme difference in those numbers on the Polymarket trade. And after doing a little research, I realized, or I learned, I should say, that Polymarket is it's a betting platform, and Americans aren't allowed to use it. So this wasn't really indicative of registered American voter sentiment.
Which is the one that only U.S. citizens can use? Robinhood.
Right. And
that's the one where it's only open to U.S.
Well, that one's also, I left Robinhood a long time ago for my own concerns about that platform. So I don't put tons of, and they came in late, right? Robinhood put that trade up. Like 2 weeks ago? Seems like it was really, really recent.
Long ago.
Really, really recent. It was a money grab. Nothing wrong with a money grab for a business. I get it. Okay. But the point being, it did not seem, I personally don't think that Americans should be allowed to bet on presidential elections, because I think it kind of taints the process and introduces the possibility of money moving in certain directions, for that. We know that money moves and pushes these elections. We know that. But mm-hmm. the point being, after doing some research on the Polymarket numbers, turns out there is one French national who placed $30 million in bets in 4 different accounts. Well, why did he use 4 different accounts? Right. And so it seemed a little bit off to me, I would say. And so, but a lot of people aped into that. Not necessarily in betting, but in trading relative to that data point, right? Trump's going to win. Trump's going to be good for crypto. And based on the words that they have said, obviously Trump has been leaning into crypto much more than
The Harris
Harris.
administration. Mhm.
No question about that. Not it's not worth debating whether he is going to live up to any of the, if he is elected, if he's going to live up to any of that, because at this point
I
we
don't
don't
think that's
know.
what people are betting on at this point. I
Right.
think they're just betting on the actual outcome.
But it's clear that he doesn't really understand the asset or the technology, right? All he knows is he cashed in on some NFTs and people are sending him Bitcoin. So he loves it, right? And if he keeps saying he loves it, the more he says he loves it, the more Bitcoin they send him. And so obviously he likes that. And his family has run into some banking problems. Imagine that. So they can identify with the unbanked or underbanked.
He's also a businessman, though, right? And when you think of the opportunity that being open to crypto and to blockchain brings to the actual country and the amount of money that could bring in.
But he doesn't understand that. That's what I'm saying. He doesn't understand the technology. He doesn't understand the opportunity.
Well, let's not get super political on this one with what we actually think of each candidate and their take on crypto.
The point is, whatever his stance is and whatever he's been saying has certainly earned the support of the crypto community.
This
understandably,
is true.
Right?
Yeah.
I mean, even the Coinbases of the world are leaning into that, right? That's who they're recommending people vote for. And for anybody who doesn't live in the US, if that's your issue, then understandably you would want to see that happen. Americans who are dealing with other issues, crypto may rank higher or lower on their concern list.
Yeah, same thought.
In terms of priorities.
Yeah.
Nonetheless, yesterday, if that narrative was true, if the narrative was, hey, crypto is going to win the election, the poly market poll is evidence of that, the Elon Musk poll is evidence of that, then and we're going up from here, then why did we go down yesterday? Why did price dump 24 hours before election day? I think that people were starting to obviously we know there's FUD. People were starting to de-risk near the top, also understandable, and that has nothing to do with the politics around it. You get to an all-time high or near an all-time high, Mark is the champion of sell when price is going up and buy when price is going down. And then perhaps there's a segment of the population, the American population, and I'm talking, big whales at this point, who might be concerned that under a Harris administration, there could be a change to the capital gains dynamic, and they wanted to take some profits before potentially getting hit with a different capital gains tax. And so, all of these things, politicians say what they think they need to say to get elected. And if something they say gets pushed back on, they stop saying it so much. So we haven't heard a lot of talk about that capital gains tax in a long time. Whatever happens, whether she wins and wants to have a 42% capital gain, tax on unrealized gains, or whether Trump wins and wants to stop taxing tips for hospitality workers, all of those things actually have to get passed through Congress before they come into a law. So it's all talk until it happens. So that's something to be mindful of. So
well,
today,
really, I think this all comes down to speculation, right? You're speculating on which president is actually going to follow through, and you're speculating on how the market is going to react.
Right. And so as I often say, speculation is difficult to make decisions on, and I always like to have data to help me with my decisions.
Yeah.
And yes, there's always going to be a certain degree of speculation in trading. But one thing is not debatable. Well, there's a lot of
That
things
is
that aren't
such a
debatable.
nice chop right there.
And,
Like that range,
well, yes, but it got so wide, right?
It
The
did.
problem for me was that it wasn't a really well defined. We went through periods of well defined ranges, right? But we got to a point where it got so wide, it was like, can you say that 50K to 75K is the range? That's that's
That's pretty wide.
so I like the consolidation periods where we were in tighter zones.
Mm-hmm.
We had here, and we were starting to get here. And so a consolidation here between the mid-cycle top and the 2021 top, that was very good to me. We saw it again here. We had some time here. These were the better parts of the range to me, the stronger parts of the range. And you can see that every time we were in there, we did nose above that 2021 top. But you remember the amount of times that I've talked about these wicks wicking below that 2021 top at 69K, and that it was always seemed to allude to a breakdown coming. We saw it here. 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 And we saw it again this week, right? We broke down. Looked like we were going to get the breakout. We had 1 candle, 2 candle, 3 candle, 3 full candles. First time, maybe ever. Let's see, 1, 2. Yeah, I don't think we haven't had more than 3 consecutive daily candles above that line without wicking below. And then, of course, over the weekend or Friday, I think things came down a bit, and now we're breaking back up here. So just as always, I want to see things building above this level. The fact that we took out the 21-day moving average also wasn't great for me yesterday. That really, after we lost this and this, it was like, okay, we had more potential downside coming our way, and the order book was opening up. We're now seeing some things change in the order book a little bit, but also worth noting here that after the weekly close on Sunday at the open, we got a new trend precognition signal here on the weekly time frame. Now, these signals are tentative until candle close, so anything can change. But I could tell you that this opened at when I first saw it, I think it was at 48 or 49% probability. It went up as high as 51% probability, and now it's sitting at 46% probability. A lot like the tightness of the poles, right?
Yeah.
So in terms of what we're seeing here, just taking it back to technical analysis and trading signals aside, I want to see price maintaining, above these
above
levels.
65.
Right. Well, 6.
Not even.
The higher level we hold, the stronger this move is, right?
Right.
We can see that we've had consecutive retests on, well, not consecutive, but we've had 1, 2, we call it 3 retests of support at the 50-week moving average. That one's held pretty good. And we can see that we've been here more recently for the past 2 months above the 21-week moving average, which is one I really, really like. I talk about the 21 a lot, daily and weekly.
Yeah.
But I perceive what we're seeing right now as really a wild card situation where the technicals could get obliterated, the indicators could get obliterated, because you never know what's going to happen. And if the technicals get respected, that's obviously a positive thing. But you always have to prepare. Listen, you as a disciplined trader, you're going to plan for what you have conviction for, but you damn well better identify and plan for if that trade moves against you. And if it is going to move against you, how bad could it get? And
that's
so
a really good thing to take away from this. That's a good takeaway. We always say, have your strategy, have your plan, right? But
also have your part of that means having your plan for if your strategy is, if you're wrong about your strategy or if something changes, right? You might have been right initially, but something may have changed. A variable may have been introduced that changes, that changes the trajectory of the price or the market. So
Right.
I always look for, what are my downside targets? What am I willing to tolerate? And there's a difference between trading and investing, right? If you're just scalping and trading, you're hitting it. You want a great risk to reward. You don't want to suffer through too much drawdown. If you're dollar cost averaging your way into a long-term position, all right, I picked up a little here, I picked up a little here, I picked up some here. Does this scare me when we come back down here? No, I'm good. Okay. And just for me, I've been dollar cost averaging since the FTX crash at 15.5. And
Yeah.
so my cost basis is somewhere down here, right? And so if we come back here, that doesn't scare me. I'm happy to add a little bit.
Does it scare you more if it runs away from you?
In which direction?
I mean, if all of a sudden it does go parabolic, would that scare you more? When you're dollar cost averaging, you kind of look forward to those retraces or those dips, right?
Yeah, I want the dip.
They wouldn't necessarily scare
I
you,
want the
but
dip. I want the dips and I want the retraces. And so the game that I play now, which may not be the best game, it's just how I'm playing it,
what works for you?
is that I'm only using about 15 to 20% of my portfolio to trade with. The rest is locked in unless we lose the macro trend line. Then I think we could go back down here to this, to the 200-week moving average around 40K. And there's certainly arguments for going lower. I know Mark can discuss that in terms of, potentially really just crashing. But for me, if the trend line stays intact, I'm not concerned. If we lose the trend line, then I want to lock in some profits. Yes, I will have given up some profits if I let it go all the way down from here, right? Some unrealized gains are going to dwindle. But as long as we're above this, I think that this is a very strong foundation for a leg up, as it has been.
That's about
each
52.
time we've interacted with it. And this goes back to the FTX crash, where I started building my position from. And so, as I've evolved, or as price action has evolved through, since then, I occasionally scale some out, my higher entries, and try and get lower entries. Does it always work in my favor? No. And it's getting harder and harder to do that, because every time I sell, I think, if I sell at 69, and I think it's going to go back to potentially 65, but it only goes to 67, I didn't help myself.
Well, I mean, not
unless
only that,
unless I go ahead and buy at
at
67, right? But I'm looking for the better, the bigger dips to buy.
Yeah. Mark, I noticed that you shared your screen here. Do you mind if I bring yours up? Let's take a look and see if you're, seeing what Keith is, or can I
Certainly.
bring yours up? Are you ready for it?
Yes.
Keith, let's take a look at what Mark has got here. What are you showing us, Mark?
All right. So what I've done basically the same thing as Keith. I can get rid of this one for now. We can come back to why that line was there later. That here's the current U.S. election, beginning of November, and here's the last U.S. election, beginning of November. And all I'm looking at is what was, it's not like, do I think the U.S. election has an effect on Bitcoin? Sure. Like, I think that that's a reasonable expectation. But I think the market structure is much more important, or much more influential. And so one of the things that I wanted to show you is to have a look at, first of all, let's look at the RSI. We had a massively overbought Bitcoin back in May of the previous year, and then the RSI traced all the way down. Didn't quite enter oversold levels, but it's touching the bottom of the range, and then it was already in a pretty commanding rally, having just broken in this extremely bullish overbought section. I mean, bullish in terms of the momentum, not in terms of buying possibility. But yeah, this was a very, very strong uptrend. It was already quite late, quite long in the tooth in this very long uptrend by the time the US election happened. And so, yes, it did break the all-time high and went on to make a very spectacular new all-time high, as I'm sure we all remember. And have a look at where the MACD was at that time. Okay, we had already had, let me pull this up a little bit, right? Leading up to this period, we had already crossed, we had our death cross all the way back in August of 2019. It, had this false breakout before capitulating down further. And remember, this was that, the 2020 crash around COVID. And it was from there that we got an actual golden cross and rallied into the election. And I think that if there was no election this day, I think that this would have continued that way. That is still, that's what bullish market structures look like. The fact that the election day happened to occur here, I think, is largely irrelevant. And let's have a look at the market structure today. Okay, first of all, we the Bitcoin strength index is headed down. This is a very it's not a very strong downtrend. You can see it's kind of stabilizing about halfway. A lot of people will argue that this is a good accumulation period. I tend to disagree with them. I prefer to accumulate when the strength is looking pretty low, as long as I'm convinced that something is got some future returns in the coming up. But the point is, this is a very different market structure. Compare it to what it looked like during the 2020 election, where we'd bounced off the bottom and we're heading to the top. And now on the 2024 election, we've come off of the top and we're heading towards the bottom. It's actually the opposite. And the same for the MACD, right? We've actually got a death cross in the most recent history. And we still haven't crossed below the break-even point, and we haven't really explored these bearish territories yet. And this is why I brought up this other line, right? If we compare this to, and we didn't let Keith finish his experiment, but I wish we had, because it's actually interesting to have a look at which Novembers sucked. Because one of them was November
2018 sucked.
So did November 21. Right? It actually, it started, this was the beginning of the end.
November 18 was a 53% drawdown through February 7th, and then we started to build out.
Yeah, so November 21 was something like a 41% drawdown. And if you have a look at the structure, it's very similar to today, right? We had just made the all-time high very recently, so we had this very sort of overbought Bitcoin phase. This is post US election, but we rallied into this part. This is the false top, some people call this. This is a very weird low volume trading pattern, but it doesn't matter. Let's just call it what it is. And if you have a look at the market structure, it came down, stabilized at about halfway, began to sort of turn around before capitulating much farther. And on the MACD, you see it's a very similar pattern to what we might look like today. If you can continue this loading bar, right, you could imagine painting a pattern like this. It's already got the cross. This would be a bullish cross. And to be fair, if you had bought at this time, you would have done quite well, because you would have been able to then come back up here and then sell slightly higher. But obviously this was, this was the kiss of death that took us into the 2022 bull market. Sorry, the 2022 bear market.
Mark, what you were just pointing out looks more like what we're looking at now.
Exactly, and that's what I'm saying. And so what I'm asking is, what do you think is a better indicator, right? All of these momentum indicators that we use to try and measure the social mood surrounding the trading of a particular asset, or the US election. I really don't think the US election matters that much. I think it's a coincidence, and like Keith was referring to earlier, it's only 3 data points. 3 data points is you can fluke that relatively easily. It's not it's not a convincing data set.
But isn't that similar to the halving? I mean, and that is everybody.
Of course,
the same thing. It's the same sort of data point.
But the halving has a causal link, whereas the U.S. election is just like there is no direct indication that should have an immediate effect. I would find it more convincing if during the Biden election we didn't see a new all-time high, and then I would say, okay, fine. This suggests that maybe Republican candidates actually do have a very strong impact on the way that Bitcoin moves. Or if during Trump's election we didn't see it, and we only saw it during a Democrat election, like if you can actually tease out, if you can tease out more important effects. But what I'm saying is, I don't think the U.S. election by itself means anything for Bitcoin price, and I think that the momentum indicators, more than the technical indicators, are telling you a much better story. And all I'm pointing out here is that in the 2020 election, it was in a very, very convincing, impulsive move. And it's not today. In fact, it's coming down off of a high. And so I don't think there is very good reason to be convinced that this election will be the catalyst to take Bitcoin to new all-time highs. Of course, I'm going to be thrilled either way, right? If Bitcoin goes up, I'll be very excited. If Bitcoin comes down, you both know I'm going to be very excited. I still think that we might come back down to explore these, 32 to 45, price ranges, because I would like to see a little bit more price structure there before heading higher. And I think I'm going to get it because, this kind of double top pattern is very, very similar to what we're seeing today. And it's
okay, so where do you think we're going?
Level. I would really like to see, or what I'm convinced that we're likely to see is at the very least coming back down to this sort of 45 to 41 range, basically where we were range trading back in December of 2023.
That's around the 200. That's around the 200-week moving average. And that range, that range we discussed for a long time. I wanted that range for so long. Like, you remember every time we left a range super fast. It was like, oh, when are we going to go retrace it? And it just
exactly.
So out of all of those, right, Mark, out of all of those, we only so far have had the retest of the 50K range. We never got the 40, 45K range. We never got the 25, 30K range.
Yeah. Exactly right. And like I said, I'm not a Bitcoin bear. Like, I still think Bitcoin has, I don't think that it is too outlandish for people to have $1 million price targets. I don't think that it's going to happen very quickly, or at least not as quickly as they think it's going to happen to, but eventually I think it will get there. And, to see some of that structure required, I think, for an impulsive move like that to be as sustainable as I want it to be, I do think we need to start exploring some of these lower ranges. So yeah, I'm very happy with the, like I said, 41 to 45 price targets. It does happen to match up with some of these EMA and SMAs. And then my most, depending on how you want to look at it, optimistic or pessimistic predictions, is starting at about 31 and heading down basically to the bottom of this range that we explored back in August of 2023. Mm-hmm. And you will remember that this was an important range for me back when we were doing this call. I was asking for this, this fall back to 25. This was one of the few times where I was very, the week later I had been proved correct. It doesn't happen very often, and I've been wrong all the way up here. But yeah, I don't think that these bottom ranges. So I think now we've spent so much time above 50K that this 25 to 30K range is just looking like more and more outlandish. But I still think the 41 to 45K range is perfectly reasonable.
Well, if I was engaging with somebody yesterday, I think about that, like how low it could go, and a comment about stink bids. I got no issue with a stink bid. I always have a stink bid placed on the chart because you just never know if it, I don't think you place them in arbitrary places. I think you place them where you have conviction that there's a likelihood that if there is a crash, that could be a landing target. But I do always conserve, have a little bit set on the side to be able to take advantage of those opportunities when they present themselves. So just to backtrack a little bit, I would agree with Mark in that the data point that started this discussion, I don't think, number one, I agree that I don't think that 3 data points are enough to say that, hey, this is the trend. It's a presidential election. And also looking at, the series of Novembers, there have been Novembers where Q4 wasn't great. And, in bear markets, we talked about 2018 had 52% of drawdown, as did 2019, had another 60% drawdown from the beginning of November to the COVID crash, and then things took off from there. And so I agree. We look at the structure. We can also look at the halving as all things that could influence. I'm not drawing it, but I'm scanning it. November, by the way, of 2022, we started out, had a dump, and then things took off from there. So this trend that we're in right now began really, I would say, on November 9th of 2022. And I think my lowest wick was November 21st. And we've been on this trend since then. So whether we shoot out the top from here, I honestly think that what we're seeing right now is a bit of, how should I say? Well,
it almost looks like that's the election November that we were seeing in
this one here,
from 23. Yeah. I mean,
exactly.
I was going to ask you, when did the halving actually start? And it might be a silly question, but we
our
talk about it
was
so much.
April 20th. April 20th of this year was the halving.
Okay. Maybe it was premature. I don't know. But I remember the moves that we're looking at previously from previous elections, right?
Yep.
That sort of parabolic move. I mean, this one we're seeing in 2023 was pretty serious, and it hasn't gone back to where it was at that point, has it? No, it hasn't.
Say that again. I'm sorry.
It hasn't retraced to where it was prior to November 2023. So it almost seems like this past November, a year ago November, is more in line with the previous, 2016 and 2012.
Well, even November
Exactly.
2022, we consolidated. That was the COVID crash. No, excuse me. That was the FTX crash.
Mm-hmm.
Okay. And that was what day did that come?
It was on that week of.
That was like November 8th, November 9th, something like
the
that.
last 2 years have just
first week of November.
Yeah. So those were like consecutive 10 and 15% candles, right? And then Bitcoin found its footing and started to climb out from there. I think we all expected more fallout. We expected to see more banks folding, and the Fed and the Treasury and the central banks did a pretty quick job of dealing with those situations.
Yeah.
And for me, I remember I was trading on Binance US at the time, and Binance US could not keep a banking partner for more than 10 minutes, it seemed like. And I was trading over there with 0 fees on Bitcoin trades, which was fantastic because you could do these little tiny scalps and make money without any fees.
Yeah.
And it just got to be, for me, I'm a conservative trader. The counterparty risk of staying on Binance US was just not worth the squeeze I was getting out of those profits. So I moved over to Coinbase. Obviously, a way different fee structure there, but on the counterparty risk side, I have much less concern than I did on Binance. I wish that wasn't an issue in this game. I really do. Because I like trading on Binance. I mean, I like trading on the mothership Binance too, but as an American, that's an issue. So we got to do what we got to do. I see somebody saying a dump to 66 seems likely. Well, sure, that all falls within this range of where our mid-cycle top is and where those moving averages are.
Would you even consider 66 a dump?
No. I mean, that's funny about this, this market.
We see these
If price
movements, right? And
moves,
it's like it's moving, it's going
if price
somewhere. And
moves,
it's
if
exciting.
price moves more than if price moves 3% down or more, we're doomed. It's done.
But
We're
this
going
is
to
what you're
zero.
talking about too.
If price
This is
goes
what
up more than 5%, we're going to the moon. It's all-time high.
This is why it's becoming more difficult for you to scalp those, though, like what you were saying earlier, right? It's because these small movements, it's like, is this even worth it to me
from a
to
scalping
do?
perspective, from a scalping perspective, that's fine, right? I can play that range. It's not that's not an issue. I'm happy to scalp, 66 or 67 to 69. But in terms of adding to my longer term position, I'd rather go to 65
Yeah,
or 60. So that's what I'm looking for, just in terms of building my longer term position.
right.
We haven't looked at liquidity at all today in this call, which is an absolute first. And
I
want to thank
know.
Mark for giving us some good perspective on these data points that we've talked about, and his
Well,
charting.
Keith, both of you, by the way, thank you for doing that. I know, like I said, we said it earlier in the call. I kind of put you both on the spot. We really didn't have time to prepare this. It was just an interesting tweet I had seen and really wanted you guys to just dig in with me a little bit more. Keith, can we count on you to post something? We didn't get to the liquidity. We didn't get to the fire charts and stuff. Will you be posting anything regarding that
I
from
will, of
your...
course, be posting today. I can tell you at the moment we do have some bid support laddered up from 65 to about 66.5, and we're hitting some resistance at 70K right now, and then there's another gap up till we get back towards all-time high territory. So I will be posting through the day for sure.
Yeah, everybody, I always say it, follow Keith, follow Mark. I just crazy
Follow
retweet
Jen.
them. And yeah, well, I always I recommend that everybody follows you guys. I like to pick your brains when it comes to trading, right? I am not a trader myself, not nearly like you guys are. I don't TA like you do. So I am more on the audience end of this, right? I'm here to learn from you guys. So yeah, follow me also. But if you really want to get into the nitty gritty of, the trading and the liquidity and what the order book is telling us, definitely recommend following Keith. And I recommend also, I know Mark had to drop. We're a little bit over the hour, so I appreciate you sticking around, Keith, and to all of our viewers as well. Not just following Keith and following material indicators, but actually like looking at the site itself and seeing what those indicators are, looking at what the fire charts are, and how it might be able to help you learn a little bit more and kind of gain those insights that he's sharing with us from that. And in addition, I know Mark had to leave, but I want to give him a shout out as well. We had gone over the simulator, and this is kind of one of those things where you were saying it's like a crapshoot. Is it going to go up? Is it going to go down? We really don't know.
There's still a range to trade.
There's still a range to trade. And this is where I think for those who aren't sure how they want to play this or want to experiment a little bit, visiting that simulator and playing with that on Carbon DeFi. So it's live on Ethereum, Say, and Celo. I recommend going in there, and it's almost like a paper trading, using historic data. So Keith, thank you so much for sticking around. Like I said, I know we're a little bit over. To all of our viewers, thank you so much for sticking around as well. I guess it's going to be, I don't know. I'm used to the election results being out the same day, but I'm hearing it could take, up to 2 weeks or something. So
I don't remember the last time we've had it on the same day, but
well, when did I move up here? 2016, maybe? 2016. I think I stayed up pretty much all night long
takes
waiting
a
for those
couple
results.
of days, but yeah, I would listen.
My
people just need
county
to
is
be
saying about
calm
10 days.
and be reasonable, and know that there's Doesn't matter. If you're American and you're a registered voter, go vote.
Yeah,
It's
that's
important.
really what it comes down to.
Vote.
Mhm.
Just vote.
Yep.
I saw.
Well, and next week we'll see. Results are in, they're not in. You know,
I saw this morning on one of the news networks, a pretty liberal one, I might add, and on their panel, you know, they're all discussing election coverage, and one of the guests on his laptop had a Wu-Tang sticker on it, and which reminds me
expected
of
it.
the classic phrase, "Presidents are temporary, Wu-Tang is forever."
And on that note, Keith, thank you again. Thank you again to all of our viewers. We will definitely keep an eye out, see what you're sharing with us in terms of the liquidity in the order book, and we'll catch up next week.
All right.
Awesome. Thanks,
Vote.
guys. Vote. See you guys.